Kwame, thank you for joining us on BRICS Africa channel.
Thank you very much, Ayanda,
Your
for having me.
first impressions about this investment?
I think the numbers are the first impression. There are a lot of pledges, and definitely for a country like South Africa, which is de facto the leader, the economic leader of the continent, it does sound a good signal for the rest of the African countries in terms of prospect of investment. And I was quite interested in listening to the 7 trillion of opportunity across the continent announced by the minister of the trade and investment of South Africa.
You are in the advisory space for THOP. Please tell us what you guys do.
So what we do, and this explains why I'm here today, is to capture those signals that the government are going to put in the public domain, and then tell our clients who are generally large multinational where and when to invest. And I think the signal I've heard since this morning are quite positive. There is a renewed optimism, even if it is happening at a moment where there is a hike in the petroleum product prices. So yes,
Pretty stiff at the moment with
yes.
all the geopolitical tension. What advice or sort of advice do you tell your clients during these times, whether they should align with the East or the West? What do you say?
I mean, there is a famous Kwame Nkrumah who said that we Africa doesn't look neither east or north; we look forward, and it's always the advice. But more specifically, with the geopolitical tension at the moment, it is a stark reminder to people that Africa is wrongly branded as the place of issue, because there's issue everywhere in the world. If you look at it, and I don't want to name a place, but you know what is going on. So that means that there would never be any perfect time for those who are not willing. So the advice is that it is the time to invest in Africa. South Africa has the solid fundamental to be the gateway to the rest of the continent. There are opportunities in South Africa, and there are opportunities all over the continent that are awaiting those who are ready. However, in Africa, you don't come for a quick win. You don't come for your quarterly stock exchange result publication. No, you come for the long term. You want to build solid foundation.
What would you say are key five things these investors should look into when they're basically starting in South Africa, to say that this is where they're going to be for the next 30, 50, 8 years?
I think we say that, but we don't say enough. By 2050, Africa would be, I think, the third or quarter of the population of the world. We're looking at a double population through 2.4, 2.5 billion, depending on who is talking. When you have that huge number, you then have to realize that spaces like West Africa are going to be easily counting more than 500 million urban consumers. That's a huge opportunity anywhere in the world. That's more than Western Europe or more than continental US at the moment. So that's the first sign. The second sign is that the return on investment anywhere on the world is getting tinier and tinier, and sign like the Chinese GDP retracting and slowing down are further proof of that. So it's only in Africa that there is a space. It's the last green field where you can do more. You can do serious multiple where the return on investment can be much higher. The third point is that the youthful population means also a diversity in creativity, in talent, in competence. So many other things are possible because Africa has always been confined to either mining, to port, or traded logistics. But services increasingly can be done from Africa, from South Africa, for instance, that has a lot of good access to connectivity, a good price in terms of energy. There could be an export of services, and it is something that we don't talk about. So the youthful population is an opportunity to export services from here, especially when, on the other hand, they are talking about depopulation, population reducing. And then I think I will put two other aspects is that we still have those mineral resources. They are going to be there. And that means that transforming those resources and stopping with the model of mining to port is going to be the real opportunity. Stop digging the ground, taking the gold and going to refine it elsewhere, using our bauxite to go and do aluminum in elsewhere. Finally, and the key point is that when Africa is 2.4 billion population, the world either would have a market or a bomb. I think the investors, wherever they are, they know how to price risk, and they wouldn't want to miss the opportunity to defuse any possible risk.
Look, I do agree with you, but however, I do need to ask. I had a friend that was trying to sell, I think, cocoa butter from Ghana. But the problem was logistics. Just bringing her produce to South Africa was more than the money she was ever going to make. So how do you get around that? I hear the problem of communication, but when the issues like that are not resolved, whether you want to sell a South Africa wine to Cameroon, but to get that wine, you have to use DHL. That is going to cost you all the profit. How do you advise what is it to be done?
Government are the ones sending the signal. If the South African government tell the wine sector in South Africa, we want you to export on the continent, the government can go with all political and diplomatic might behind it, going to have trade agreement. Because yes, the AFCFTA is the framework at the continental level, but between two countries, between two regional economic community, there could be more to be done. What I want to say at that point is that once the government send the signal, the private sector would follow because they know they go to mature market, they would export the wine rather to Europe, to UK, to Latin America, because they have been already work done in that regard. And I don't think there is enough work done between South Africa and the rest of the continent in terms of economic diplomacy to say, okay, that we have identified the opportunity, we see the bottleneck, but we want to accompany you, private sector. Because when you want someone to invest in logistics between South Africa and West Africa, you have to, as a politician, guarantee to that person that there would be a support so that its operation is bringing return on investment. That's not always said.
Well, a lot of governments do promise, and I'm sure they mean well. But when one looks at the ports, again, the infrastructure or even the lack of energy to really process material. One of the reasons people like say, hey, you might as well take this iron ore and process it elsewhere is because you don't have the energy. What is it about these investments from here to the African Development Investment Forum that you believe that a right sign and private sector is ready with its money to also chip in when it comes to infrastructure development?
I think if I'm not wrong, one of the first presenter after President Ramaphosa address is the Minister of Energy. That means the government of South Africa understand more than ever that energy is fundamental. The question is not the challenges. Like I said, in some other region, the challenge is in terms of security. In some other region is lack of people. I was previously in Europe before being here, and their issue is to have enough people to power the companies. So everywhere there would be challenge. But if we focus on the challenge, we will have a lengthy conversation. I think if you look at the numbers, since AFCFTA in 2024, there have been 14% of growth of inter-Africa trade. Those are the positive. So I am convinced that we are going into the right direction. The private sector is picking up the right signals, and there would be more investment in energy. It wouldn't be fast because those are infrastructure projects that require much longer time, maybe sometime longer than our lifetime.
Well, the BRICS Africa, BRICS countries, the BRICS bloc, are not really deep in terms of investment in Africa. What would you advise them to do differently than the traditional Western investors coming from the West?
Patient capital. I keep telling multinational when we work together, if you're coming to Africa to show your board every quarter that you are progressing, you are having growth, you might be disappointed. But if you are here for the long term, you are going to. And we have a case study for that. If you look at Korea, not Japan, China, and you look at them 50 years back, it was not the place for quick win. They needed to do the investment, train the population, invest in the energy, have the dams in place. And now today, everybody is seeing the result, the 2 digit, and then now 1 digit growth. So the key thing that BRICS could do differently is the patient capital. The second one is the port, the factory to port, the mine to port model is not going to land very well with government under debt pressure, under a youthful population that is having a lot of social demand. They wouldn't be able to continue doing the port, the mine or factory to port model. There would need to be more and more value created and managed locally rather than exported, which was a colonial model that became a legacy.
I keep saying, Kwame, thank you for joining us.
Thank you very much.